Rohit, let me come to you first. What's the key level to watch out for that we are at 8,000 level? What's a closing level that will worry you at this point of time?
No, I think we are away from the worry level, because the worry level was, I think, breaking of 8,300 itself on on Thursday, and on Friday itself we closed below the 20-week average, which is something that's happened after a long time. So those were already trend reversal marks out there on Thursday and Friday. So today it's more about, in our long short funds, we are all short. So the thing I would be worrying about is where is it going to bounce back from, or is it going to bottom out? 8,008 is the lower end of the weekly Bollinger Band, which is the first intraday support you look at. Now, typically, if the market had come to that level over a couple of days, we would look for a support and a bounce back. But in a panic situation, it's hard to say whether the level would work or not. But that's a number first to look at, and we're already almost there. So 8,008 is, I think, one number, and the second one below that would be around 7,930, which would have slightly more medium-term, longer-term implications, essentially because it marks the multiple lows of the last 6 to 8 months. The trend line of that, which we call the neckline, is at 79.30, and I think everyone will be watching whether that breaks itself and indicates still lower targets. And sometimes in the near term, like I said, these levels can give you short-term bounce backs, but the trend might likely continue to the down.
So these short-term bounce back that you just spoke about would again be shorting and shorting opportunity if you're a trader in the market?
Yes, they would be, and it would be hard to say what would be the size, because bounces in a downtrend can sometimes be small, they can sometimes be very sharp. If there's an announcement or an event, you suddenly retrace 50 to 60% of a 3-4 day loss and then again start falling. So you can't really time it apart from giving it a day or two and then acting on it. But yes, you do get bounces which are essentially selling opportunities.
Harihar, what would be your view? You think this panic will continue in the markets?
Say, at least for the foreseeable future, I think we should see this panic going on, and we need to understand this panic in a slightly larger perspective. I think it is not just about a Chinese yuan devaluation which has happened in the last couple of weeks. I think it is actually the combination of too much liquidity chasing too few assets over the last 7 years. And what we are finally seeing is that this entire logic of building up an asset mountain on the back of liquidity is beginning to crack. Which is why our markets across emerging markets, developed markets, and you see any market, France was down 5%, Germany was down 3.5%, US was down 3.5%, China is down 8%, I think Nifty is down about 3.5%. So I think it's like an absolute global sell-off where ultimately investors are realizing for the last 7 years you have built a nice fancy mountain of value out of nothing, and I think all that is gradually crumbling. So at what level it will stop, it's very hard to say. I think we'll have to see whether globally there is a short-term bounce back, a short-term support, and that's what I think the Indian market should depend on. On its own, I don't think the Indian market is going to behave anything in isolation. It will largely be following the global markets.
Right, but in such an environment, would you advise people to bottom fish or just wait and watch for things to stabilize before they buy, even if they have to buy something which is good even at 5% higher than what the prices are currently right now?
See, bottom fishing would be quite an ambitious word. I'm not sure whether you should bottom fish in this kind of a troubled water. Having said that, I do believe that this is the right time to buy dollar defensives because within our entire, gamut of companies, probably pharma and IT are two sectors which are number one dollar defensives, and number two, they're also companies with probably the best operating margins and the profit margins among all the other industries. So I think if you look at quality IT companies, quality pharma companies, I would believe this is the time to buy. You may not get returns in 3 months or 6 months, but if you have a 1-year perspective or a 2-year perspective, I think quality IT and pharma should surely outperform from these levels.
Right. But you would want to stick to large cap names that have their mark, they have their clients, so one should stick to the large cap tried and tested names?
At least in IT, yes, I would prefer to stick to the large names. But I think pharma, I would be more than willing to look at even some of the quality mid-cap stocks apart from the frontline pharma companies.
Right. Rohit, what will be your view as far as the currency is concerned? You think this time around it's the currency which is selling off and that is leading to a panic, or it's vice versa? Because of the sell-off in the equity markets, currency is seeing a decline.
The currency is a slightly complicated question. I think the currency has been declining over most of the last 1 year. The only thing it was doing so very slowly, essentially because the markets were holding out. So the low that we made somewhere around 58 is almost a year old. Okay, so and from there we've been slowly moving up. We moved up to 62, 63 now over an entire year, and now within days, we are at 66. We are above 66. So I think. It's a mix of things. Yes, the speed is definitely coming because global equity markets are selling off. But the direction, I think, was already set with what was happening in the currency market over several months, which is the dollar was actually strengthening against most other currencies. And I think India and China were the two currencies which were holding out, even though they weakened a bit, but they were substantially holding out in that sell-off. And I think the equity sell-off has just aided that to catch up. So that's how I would put it. But my sense is the trend has been up and it continues to be up for the USDINR. And I think so for at least it should probably stay that way probably for another month or two.
Right. So you think that there is a panic likely to be created because of what happens over there, as in not only in equity markets but with some importers as well who generally tend to be unhedged with INR USD?
Yeah, I think unhedged positions can be a problem. I don't know. We can't know really to what size that has happened. There have been enough warnings from the RBI that hedge your positions. I think they've over time told people that you take care of your positions now. So if someone has not done that, then definitely there would be some trouble. But if I purely look at data available, which is the traded open interest in the markets, there's actually very little. So if you say that people are unhedged, that is why the amount of trading has been limited in the currency, maybe. But the open interest was actually at a record high a couple of weeks back in the month of July. We saw an all-time record high in the open interest in the NSE futures. So that was a sign that a lot of position build-up did happen. Whether it was hedging or trading oriented is a different question. But what we haven't seen is volumes come back to that segment after they fell off from all the intervention 2 years ago. Volumes have not gone back to the levels they were at 2 years back, but open interest definitely has. Yes, there is usually an economic impact of the currency, which we will see in the months to come.
Right, Rohit, as we are speaking, in the mid-cap index is down 3.5, and this sort of a move was not seen for the last few months or so. Mid-cap was tending to outperform, but now probably it's even the mid-cap index which is looking weak. SKS Microfinance on your screen down 12%, 448 for SKS Microfinance. IFCI, 7% decline. It's a very, very high momentum name, and probably that's the reason why this is going down. Indiabull Real Estate down 5.5. Most of the real estate tends to be high beta in the market. DLF would also be down by about 5% odd. Tata Communication on your screen down 7%. It's a name which people like because of the data growth story in India. DLF up about 6.8% to 106.2. Jayaprakash, it's down about 6.2 odd percent. Jayaprakash Associates down about 6.5, 9.5 rupees, 65 paisa in terms of decline. Century Textile is down about 6%, 626 for Century Textile. Another name which is very high beta, a lot of FNO positions, and it's going down. 5.5% decline for Eicher Motors, 19,349. This is a name which doesn't have that much volumes, but it's a part of FNO, and maybe that's why the price seems to be quite high, or the price action seems to be quite high. PSU banks, PSU mid-cap banks first. Allahabad Bank down about 5%, 83 odd rupees. Just Dial, as I see, is down about 50 rupees. UCO Bank is down 4.5 odd percent. And now, as Nifty is settling down, the markets is settling down with what's happening in the Asian markets. We are at about 8,026. So we are exactly at the midpoint of the day's low and day's highest point. So probably you get a sense now that we may stabilize around here on, and the next Q may be coming in from the opening at the European market. Right now, if I look at the Dow futures and how they are doing, so they have extended the losses, but very, very marginally though. So an S&P 500 last we checked was down 2.6. It's right now down about 2.7. So I think the activity over there also seems to have stabilized. But Bank Nifty, CNX mid cap, all of this just tells you the momentum in the market. And look at Bank Nifty, it's down 3.8. When we went up, private banks were the best way to play the economy, and right now you can see among the top banking losers, the two private banks, the two large private banks, Yes Bank and Axis Bank, are among the top losers. So Yes Bank is down about 50 odd rupees, ICICI is down 5%, OBC down 4%, Bank of Baroda about 5% in terms of decline, 190, Allahabad Bank, Syndicate Bank, Union Bank, all of them on the lower side. Hariyar, you would use this opportunity to be overweight on the private sector banking names. I mean, we've seen the big crisis in the last 10 years or so. Most of these names seem to have survived that crisis without any major issue, without any major capital funding coming in. You think now their size is very big and the numbers can become slightly slower in terms of growth because of what's happening globally?
No, I'm not very positive in the private banks, barring probably a couple of the not so large names. And I think my concern primarily stems from the fairly large amount of troubled assets and exposure to troubled groups that some of these large private banks have. I think what we have seen till now is probably the more apparent case of PSU banks being exposed to companies with dubious credentials. Now, I think that is going to extend to the private banks, so they are unlikely to be spared. I also believe that as long as rates are high and the RBI doesn't go out cut rates, private banks do not have much to cheer about. So I say overall banking as a space, I don't think is a great time to buy when there is a concern of overvaluation of stocks across the world, when there are a lot of hidden bad assets in the Indian banking system. I would believe that banking per se is not a very great idea to buy at these levels.
Right. Rohit, would you agree with the view? Private sector banks, the fall has just started and one should wait and watch?
That's part of what we have seen, I think, in the last couple of weeks. When all this bounce back occurred in PSU banks, you've seen that the private sector banks really did not pull up. And they've started to lead the way down in the banking sector over the last couple of days. So yes, I do think that, you're going to see a good cut as far as the prices of private sector banks are concerned. The signs are already there. And it's apparent more in the bank index itself. You see, if you just look at the bank Nifty, when did it top out? It was one of the first indices to top out in Jan of 2015. It has not been able to go above that level. In the interim, it retraced almost 60% of those losses into last month in June and July, and has been falling ever since. Now today it's very close to the low that it made in between, which was at around 17,100. So we're coming close to that. And once we break that, then I think we are looking at, much, much lower levels. And my sense is we are going to break that, which means that, we could be going down initially to maybe around 16,400, which is somewhat the 20-month average. So I think that's the next level we'll start looking at. And yes, it would be across the board in banking. It should be private sector banks, essentially, because they've not fallen. And public sector banks, I think the rebound is more or less done. So they would also probably just continue to slide with the banking sector itself.
Right, Rohit. Thank you so much for joining us here this morning. Hope you have a great day going ahead. Thank you so much, Hariyar.